India's economic engine is roaring, and smart investors are looking beyond market noise. In this special Q4 FY 25-26 edition, we uncover fundamentally strong and fairly valued stocks, companies with clean balance sheets, strong cash flow, and real sector tailwinds. Hi everyone, welcome back to my channel Market Insights by Rajesh Sharma. So let's begin our journey. From consistent profit growth in banking and defense to clean asset quality and hefty order books, this list is just not a hype. It's about fundamentals, visibility, and value. So stay tuned till the last. Stocks trading book below book value, P ratios under 10, and robust dividend yields. These aren't speculative trades. These are solid businesses with long-term compounding potential. So keep a note of it. Banks are evolving with technology-led retail lending, better provisioning, improving NPS, and capital buffers. This is a sector where fundamentals and digital scales are aligning together. India's defense space is on a multi-decade upcycle, backed by strong execution pipelines, cash reserves, and a Make in India push. Stocks like HEL and BEL are at the heart of this transformation. Energy giants like NTPC and Oil India offer rare value with strong dividends, predictable earnings, and green capex visibility. These steady horses in a volatile markets are available to you at a fair valuation. With mega infrastructure projects and logistics reforms, PSCs like CONCOR and IRFC are seeing renewed interest, debt free and fundamentally solid. Let us see the companies in detail. But before that, if you like this channel, if you like my videos, if you like the uniqueness of my videos, please do subscribe to my channel and like and share my videos with your friends. Our first PSU bank is Bank of Baroda with quarterly profits above 5,000 crores and GNPA under 3%. Bank of Baroda stands out among PSU banks. A CRAR of nearly 15% ensures capital strength, and trading under 1 times the book value makes this a high conviction value pick for long term investors. Please keep it in your watch list and seek your advisor's consent before any investment. If we see the chart of this of Bank of Baroda, we see that it is giving us a new breakout. Uh, if you see here, it's a breakout here, and it's a very good investing potential in the long future. And it is also available at a very reasonably below its highest values, which is at a very fair valuation. So please analyze this stock and you can keep it in your watch list. Next amongst our PSU banks is the Indian Bank. Indian Bank has quietly cleaned up its books. GNPA down to less than 4% and a steady ROA uptick. Consistent profit after tax growth, improving provisioning and conservative management makes this a dark horse. Adding addition to that, high dividend yield and digital adoption are its hallmarks. So if we see the chart, this also is ready for a breakout. In a very short time, it will regain its earlier positions. So please do keep it in your watch list and seek your advisor's help in understanding the valuations. Next, amongst the private sector banks is the Federal Bank. Federal Bank combines solid asset quality, GNPA less than 2%, with a healthy margin, NIMs more than 3.3%. What's more, a strong focus on SME and retail lending with robust digital channels, priced under 10 times earning and price by PB ratio of 1.2. It's a classic value meets growth story. This is also a must in your watch list, and you can seek your advisor's help in understanding the valuations and the trends before any further investments. If you see this Federal Bank, it is near to its weekly breakout, and very soon, if the trend continues, if the trend is not a uh, dampener, you will soon see Federal Bank rising to very high levels in the coming months. Next amongst the private banks is the City Union Bank. Now, City Union Bank, this SME focused lender runs a conservative ship with low risk underwriting and a sharp focus on tier 2 and tier 3 cities. ROE is trending towards 15% and valuations are near decade lows, just 0.8 times your book value. A strong capex cycle could be a game changer in the near future. Please keep it in your watch list and keep monitoring this stock. If you see the chart of City Union Bank, you will see that in the weekly chart it is giving out a breakout, and if the momentum continues, it will soon reach its earlier highest levels, which is more than 200 rupees. The MACD crossover is also there, and please analyze it yourself and seek the advice of your financial consultant. Then in the defense sector, we have Hindustan Aeronautics Limited, the king of the defense sector. HAL is the crown jewel of India's aerospace program with an order book of over 90,000 crores, debt free balance sheet, and an ROCE above 25%. High dividend payouts and indigenous programs like Tejas Mark II add tailwinds. This is a core defense compounder. You cannot ignore this sector in the coming years. So we see the chart, the valuations are very lower than the peak which it had attained earlier. So this is the right time to seek your financial advisor's help in understanding the trend and analyzing the chart also. So do keep it in your watch list and keep monitoring this stock. It is available at a very fair valuation, which was never there for quite some time. Next in the defense sector is the Bharat Electronic Limited. Bharat Electronic Limited is quietly becoming India's defense electronics giant with a 75,000 crore order backlog and 20% margins and strong export ambitions in electronic warfare, Bharat Electronic Limited is more than a PSU. It's a high technology platform. Its a PE of its PE of 30 is well supported by long-term visibility. It's a must watch in your monitoring list and keep following this stock and take help of your advisor for future investments. The chart here maybe at this level it is little bit showing some downtrend, but in the near future it is ready for a breakout in the weekly chart because there's already the crossover MACD crossover has already happened. So you can keep monitoring this. As soon as it gives you a signal, maybe two green candles, you can again analyze it and keep watching this stock. Next comes the financial services sector, which is a high growth sector and highly potentially high in demand in the coming years. So first we come to SBI Cards. SBI Cards is capitalizing on India's growing credit card penetration with GNPA below 2%, ROA over 4%, and a highly scalable model via SBI's network. For investors looking at financialization of consumption, this is a long-term compounding play. SBI cards will certainly have a larger penetration in the market in the coming years. So please keep this stock in your watch list and keep monitoring it. If we see the chart has already given a weekly breakout and do keep monitoring it because it has a potential of giving good dividend as well as good value in the near future. Next amongst the financial services is Cholamandalam Investment. Chola is betting big on Bharat with 25 to 30% CAGR earnings growth, backed by vehicle finance, LAPs, and consumer loans. Its technology enabled underwriting and strong promoter support, which is the Marugappa Group, make it a top pick in the NBFCs. It is a potential stock to be kept in the watch list and keep monitoring it. If you see the weekly chart, you'll see that there is already a breakout on the weekly chart and MACD crossover is already taken place. So if you're a long-term investor, you can keep it in your watch list and keep monitoring it. Next, we come to the energy sector. India's largest power producer, NTPC, offers scale, stability, and green upside with over 73 gigawatt of capacity, a deep capex pipeline in renewables and hydrogen, and a dividend yield of 4.5%. It is defensive play with clean energy potential. Don't miss out this stock from your watch list. Keep analyzing, keep watching, keep monitoring in the coming months. If we see the weekly chart, the breakout has already happened in the weekly chart, and you can seek your advisor or consultant's advice for the right levels for investment. Next amongst the energy sector is the Oil India Limited. Oil India is a classic value bet. PE below 5, high EPS, net cash, and excellent dividend payouts. With oil prices firming up and new exploration prospects, the risk reward remains highly favorable for this company. Coming to the stock weekly chart, although it is below the signal line here, but keep monitoring it. Once it crosses this and gives you two or more candles, you can seek your advisor or a consultant's advice for investment purpose. Till then, you can keep monitoring this because the MACD crossover has already happened, and you just have to find out the right momentum and the right time and the right price at which you can enter. Now we come to the public sector enterprises, and what better than Containerization Corporation Limited, CONCOR, is the leader in rail freight, is a direct beneficiary of the dedicated freight corridor. Operating leverage is kicking in. The balance sheet is debt free, and future infra spends make it a long term logistics play. What else do you require from a public sector enterprise company? The right notes are there. Keep it in your watch list, keep monitoring, and keep analyzing too. So if you see this weekly chart of CONCOR Limited, you'll find that it is just about to cross over the signal line, which is the black line, and the MACD crossover has already taken place. So just about you just have to monitor this and keep it in your watch list and find the right time and right price for it for entering into the long-term investment. Next amongst the public sector enterprises is IRFC. IRFC is the silent compounder, an asset light NBFC funding Indian Railways with predictable earnings and ROE of 15%. With rising AUM and stable income, it's ideal for income investors and those seeking PSU plays with high visibility. So if you see the weekly chart of IRFC, it is fairly priced and much below its highest levels. So this is the right time to keep a watch on this stock. MACD crossover has already taken place on the weekly chart. Keep monitoring, keep watching, and you can take a call in the future by seeking advice from your advisor. In summary, these are not just names, they are stories backed by earnings, cash flows, and competitive moats. Strong fundamentals, check. Fair valuations, check. Long term potential, absolutely. Quarter 4 FY 25-26 offers a perfect storm, and Q1 coming up will give you additional confirmation. Sectoral tailwinds, earnings momentums, and low valuations. Smart capital allocation now could reap rich rewards in the years to come. If this video helped sharpen your investing lens, don't forget to like, share, and subscribe to Market Insights by Rajesh Sharma. Drop a comment below on your favorite stock pick and the reason for it too. And let's grow our wealth together. Thank you. And April, May, June is the investment time. Take your calls, take your picks rightly, taking the help of your advisor or your consultant. And do subscribe to my channel, like my videos, share my videos, and see you until next video. Thank you very much for being part of this channel.